What's going on, guys? It's your boy Curves back again with another trading video. This trading video is going to be a little bit different. Um, Many younger traders or amateur traders or beginner traders are expecting to win all the time, but I'm going to be showing you the real game and the real losses of trading. And this is what trading is all about. It's about how can you deal with losses, because it's easy to win, because when you win you don't really learn anything, because you just followed your plan and you just followed um it's just easy to win it because you feel the dopamine, you feel that. But in trading you cannot be feeling the dopamine hit, you cannot be feeling the euphoric feeling of winning. You can't be you should not have any emotions, whether if you win or whether if you lose. So today I lost, and I lost good. And what I mean by losing good is I followed my plan of losing. You gotta have a plan when you lose, but you also gotta have. It's easy to have a plan when you win, because when you win you just receive the money. But when you lose, you get into this spiral of emotional spiral. And how can you have a plan of you going into that spiral and avoid that emotional damage and hindering you from being profitable and leading you to become more uh emotionally trading, and then leading you to blowing your account. Well, there's a limit to it, and this trade just proves it, because I was coming into this trade um reading my bias, and my bias was actually pretty tricky. And I was looking at it. We already tapped this daily gap from last week. We already traded from here, the rejection from here, towards to the retracement, and then to the upside movement. And then it hits again. And then we traded all of this. And then today, Monday, it retraced back to this daily gap. And then I knew there's gonna be a consolidation area. And I was looking at this. We might be just consolidating today. And I was pretty right, because this is an area where he reaches and then just rejects. But then once it reaches to this level and rejects multiple times, there's a pattern to this. Like, if it rejects it over here in a 4 hour time frame, if you go down to like 15 minute or 5 minute, we have a bunch of consolidations in this area. So it's a key level where this area is known to be rejecting, and just like volume is slowing down. Which means if you just like drop down to 30 minutes, as we can see, we have rejections from previous rejections here. Um, let's see. We have previous rejections here. Bam. And then if I see two or more rejections, it's a key level where the volume stops, and it might do sudden moves, and you might not know the bias yet, because you might need a stronger breaker structure. But in this case, we don't even have that prior to 10 a.m. 4 hour candle, because all we were doing was just, if we drop down to 15 minute or 5 minute, we have this range right here. Let me delete this. We have all this range where it doesn't even break structure. You know, it doesn't break structure. It's literally in just range like this. It's just consolidating. It doesn't give us anything that it can go up to the upside, or even go down to the, even confirm that we can go down to the downside. Yes, we broke structure over here. That's why I was a little bit more bearish at my first trade. And then we just suddenly move up and then move down again and move up again. So this is a consolidation day, which means I was ready and prepared enough to take risks, but lowering my size. All right, so I took my entries and I took 3 trades over here. 3 trades max is my especially on these type of days. I only would try to risk around as little to from 250 to 100, but I would start on my first trade $100 or even less. But with my strategy, I would easily try to break even or cut my losses. In this case, okay, right when right when 10 a.m. open or 10 p.m. open, I saw I saw this accumulation or consolidation that we needed to find before we have a liquidity sweep, right? I saw this accumulation over here. I was like, I need to wait for some sort of liquidity sweep. So we got this liquidity sweep right here, right? But then I waited and waited because I saw a gap right here. And if you look at 5 minutes, that's actually a 5 minute fair value gap or imbalance that can reject from. It's a level that it can reject from. And at this current price, I was a little bit more bearish because we're tapping into a 5 minute it can reject and then can go lead down to the downside, and which it did. It rejected to this point because it tapped into a 5 minute fair value gap, right? And then immediately went down. But this is very confusing, and I realized, look, it's not about the markets now. It's how can I lower my risk because I know it's going to be consolidating based off the uncertainty of the movement of the market. I saw right before I was gonna trade to the upside, I realized that we're tapping into 5 minute fair value gap. I was like, okay, and we have this big leg down. Just immediately, once it taps to that 5 minute fair value gap, it just went down immediately to the downside. I was like, okay, this is a pretty good um confirmation for me since we have volume and we already swept liquidity through this accumulation over here. We swept liquidity and we're tapping in the fair value gap. I was like, okay, let's tap in and actually take a trade. So I took a 150 risk with this stop loss right here, and then I'm immediately in this 1 minute it went up like crazy, and then went down, and then I would be okay if it I would be okay. Usually my strategy doesn't consist too many drawdowns, but once I saw it consolidating to this at this price, I closed it immediately because I want to cut my losses as soon as possible. That's one way for you to become a good loser. Is cut your losses quick. All right. So I have this rule when I keep in mind always, even if I win, even if I lose, I keep in mind that a big win is better than a big loss. I mean, a big win is better than a small win. A small win is better than a big. Uh, a small win is better than break even. Break even is better than a small loss, and a small loss for me is considerably $400 to $500. That's a good loss for me because if I exceed that amount, that's kind of like over the trade frequency that I had on that day would been too much. Or if I'm risking so much that I become emotional. So $400 to $500, or even just 400 to 450, is such a good loss for me because I can recover that tomorrow or even the next days. It's not becoming emotional; it's more logical and more probable. And now getting me into the mood of longevity, right? So I'm thinking risk management, longevity, and staying confident with my strategy. So that's exactly why I risk only 150 here, because I know I can just cut it off as soon as as soon as I realize I'm wrong. And I realize I'm wrong. It would have topped me out over here for 150, but I cut it off from there. But over here, I saw this inverse fair value gap. This is where it gets confusing. I saw this inverse fair value gap, and I was changing my bias because we're in this, once again, this higher time frame zone that we have a pattern that we've been rejecting upon to, right? So we've been rejecting this level multiple times, this whole gray zone from the past, from yesterday. I can't even show you guys, but we know that this daily gap right here is such a huge significant um point of interest or key area, because this is an area where it can reject on the higher time frame. So I was thinking, okay, we have this 1 minute inverse fair value gap, IFVG. So I was like, I was pretty confident to go full on $200 on this. I went full on $200 and I lost. I lost pretty much $200 over here. And then this is where it gets pretty interesting right here. This is straight up loss, and it's a good loss, but I could have risked less, but I don't really care because I was looking for another opportunity where I can get in, but I only risk another, I would say 180. I risked 180 here. So I lessened my 200 into 180, and then I immediately lost. And at that point, yes, I would say it's my, I hold accountability with everything that I did over here. But more importantly, I rest less. I risk less. My bad, sorry for my English. I risk less, and that was the best decision I made, was risking below 200. But I lost about 446, but I know I was up for that whole week last week, in the last week, about, I don't know, 8%, probably up 8%. So this is a small loss compared to my winning trades and the percentage I won. But the most important part here is my mentality, and the moment I literally saw it tapping into my stop loss, I closed the tab and literally shut it off and go do something else. Because if I didn't do that, you as a beginner trader, you're gonna be emotional, bro. You're not gonna, you're probably just gonna press the button until you try to make it back. Me, I know I'm gonna lose, and I accept that I'm gonna lose. And even when I trade, and I know that if I do my strategy, and I know I have a win rate of 50% to 60%, I still, in the back of my mind, I still put it embedded in my back of my mind, I'm still gonna lose to this day. This day I'm gonna lose. This day I'm gonna lose. But I have the confidence to execute my best winning trades. And if I just follow my plan, follow the checklist and the confluence that the market is telling me, and when I execute it, I put the same risk as needed. It's gonna be hard to understand, but all you need to do is risk accordingly. If you see your setup not working out, just risk less. Just risk less. If you're not confident, risk less. Or cut off if you're not confident in that trade. If it makes you pray, that's a moment you start cutting off your losses, or that's a moment you stop trading. All right. So this is much more important rather than me showing you guys the winning trades, because you're not learning something. And if you start putting your minds switching in your mindset into becoming a good loser, you win. It's very, very counterintuitive, because if you put that mindset into that, if you go into in the day where you're trading, and then you put your mindset to, oh, I'm gonna lose today, but if I see my setup, I just press it. But if I risk good and willing to lose, let's say 200 to 250 to even 400, that's equivalent to 2 trades, bro, you'll be fine, and you'll accept that you can trade again for the next day. I don't know if you guys understand, but this is what's happening in a trader's mind. Every trader is gonna say the same thing, that it's all about risk management, and controlling your emotions. Because once you have a real backtested strategy and have a data to actually back it up, it's all about just, okay, how many trades can you lessen in order for you to keep more profits and lose less, right? So it's all about risk management and emotions. And today I showed up, and I'm pretty proud, because this is, for me, it's considered a good loss. You might not look, you might look at me and think I'm crazy, but this is a good loss for me compared to the winning trades I had, because of me just following my plan. This is a good loss, because first, I only lost 450. The RR ratio is nothing. So this is like pretty much like 2R, and compared to the 8R that I won. So I'm about what? 7R. No, I mean, sorry. 6R left. And I still have profits. And that's what having a profitable system gives you. And second of all, I accept the loss. I accepted the loss that I was gonna take right before I traded. And then once I began trading on the third trade, I actually tried to lessen my trade risk, my trade risk, and I literally just stopped once I saw the stop loss hit. I stopped and close the tab, do something, get out, and that's what trading is all about. Is, can you manage your emotions, and can you trade the next day? Live to trade the next day. Don't live to trade, but trade to live. And yeah, that's it. Hope you guys learned something. It might be confusing, but as you go through all of this, bro, trust me, you're gonna learn. Peace out.